What's going on, everyone? Give me a couple of minutes. Let me just get a couple things together real quick, and I got you. What's going on, good people? Just wanted to go over a couple of different things that I see in the market and show you how I go about looking up these setups. Just want, um, had a lot of good movers today in the pharmaceutical sector. You had like ABBV move pretty decent, LLY move decent. Well, there's a bunch of them. Pfizer did pretty good in the past couple of days. I got a couple of them. Hold on, let me look at them real quick. Merck did good. MRK, Johnson & Johnson did pretty well. Jazz did pretty decent. There we go. Jazz performed pretty decent. Just going through this when I'm looking at anything, looking for setups. The way I like to go about it first is I'm more of like a top down trader. I like to analyze everything from the higher time frames coming down. So most times I start like in a monthly time frame and just kind of see what's going on from the overall picture. This is I guess this is the area that we'll be dealing with here. So first thing I'm doing is just setting it off with trend lines to give me like a boundary. Now when I draw trend lines, I like to keep the same, I guess, angle for the trend on both sides of the trend, the top and the bottom of the trend, right? So this is just giving me a boundary for the whole thing. So I'm gonna duplicate this line and just bring it to the top of the trend. So this is my boundary for the trend. In order for price to break higher, my alert has to cross this trend here. So if I'm looking for this to, let's say, go to a target like this, like 170, then I got an alert on this trend line. Let me know when it breaks out. Now, we break this down even further and open up this section, and we can go down to a lower time frame here. And the next thing that I like to do is break this section into 50%. So break this section in half. I like to bring that same trend line down and just split this into 50%. Now, you could be more accurate or less accurate depending on how you're moving it. This is all arbitrary. You know, I could draw a line anywhere and say that hit something. You know what I mean? So I always just try to keep in mind that within like a certain limit, a certain area that I'm working in, that I'm drawing these lines so that it's not noise, right? So anyway, we get this 50% here, right? Everything that I do on my mind is about hitting 50% targets, right? So when we put this line in the middle now, and we make this like a 50% line, we can make this like a dash line or a dotted line, and you kind of just see how price reacts with this area. One second, just trying to turn this volume off my phone. You see how price reacts with this area. So this is more or less like a pitchfork kind of, right? How we could follow price reacting. We know that this is in a downtrend now. When it bounces, we can aim for these areas, right? And we can start building these trends, not just from what we see here, but what we see here in the present time. But these things come from the past. So you want to, this is an ongoing story. So I know I hear a lot of people talk about, oh, you got to wait until Monday to trade to figure out what you're going to do, because you don't know what the market's going to do. And I feel like it's the opposite of that. Like, you can always kind of know what the market is going to do, because this is always an ongoing story. All right, so this is part of how I start setting up charts. The next part is that I'm real heavy on bar combinations and chart patterns, break of structure, price action, real technical when it comes down to everything. Not really interested in the news. Whatever happens. I feel like it's all priced in already. And yeah. So this is jazz right here, right? And when you look at like plays like this, and you wonder like how could you have caught like this move up here, right? As you can see up here, I got like tons of different time frames other than like the normal time frames. So again, I like to go out as far as possible, right? To where there's less noise, right? That way we can see exactly where, I like to call them shelves, but they're really market structures. But I like to look at it as a shelf in certain instances, like just because those are areas where prices is gonna come back. I don't like calling this support and resistance because price moves diagonal, right? So support and resistance has to be diagonal. Price moves up and to the right, down and to the right, up and to the right, down and to the right, up and to the right, down and to the right. So it doesn't move flat, right? It may range, but it's not flat. So these are market structures to me, right? They may act like support and resistance, but this is more of a market structure to me. So I like to call it like a long market structure, like a shelf. We know prices hitting the shelf X amount of times, right? You got it where price hit it there, price hit it reverse there, price came here. So these are all indications that we're looking for that'll tell us without any indicator that we have something here potentially playing out, right? So that's how I like to come across and just look for different plays while they're going on, and how to find like great entries on a play. Now the next part of this is setting alerts, right? Because this is an ongoing story. This trend line right here, once we broke this, right? So these are market structures, right? And this, I'm just using this as an example, but you can do this on any ticker, right? So this right here, this little area right here, this was the market structure, right? So price came up here and then cleared the market structure. Once it cleared this market structure right here, right, we could automatically have drawn like a market structure line. As it's going up higher, you want to think to yourself, right? The market usually goes like breakouts and retests. That goes for like market structures. That goes for chart patterns, bar combinations, order blocks, fair value gaps. That goes for everything, right? So if this breaks out from here and then it just never comes back down yet to retest it, then you should want to extend this market structure, right? And then once you extend it, you should want to look for reasons that the market's going to reverse to come back to that market structure, right? So once that happens, right, and you get it's probably gonna move again. Once you get these confirmations, these are times that you're looking to just jump into play to follow through it. Now again, I like to do 50% of everything. Like I said, once I have this angle here of the trend, and then I know that this market structure was something that just always has been retested for the past since 2014 this broke out, right? So we know that this is a nice structure for it to bounce on, right? We got this here, we got this is broken down to 50% now. So now next thing I would look at is, all right, how far up do I think this is going to bounce? Now before I even get into that part, we can break this piece down right here into 50% too, right? So I like to always just keep breaking this down to 50% as time goes on, right? And if, let me move this up a little bit more, something like that, right? So you can always see like price reacts all the time at these 50% areas, right? This is 50% of the move. Price reacted here. Then it broke over to 50%, right? So this is 50% of the top half. then you can do it again, right? You can break that down. You can do 50% of the top half now, right? And it would be something, I guess, something like that, right? Which you can see where they reacted over here, right? So the 50% of all of the angle in the channel, that gives you relevant target points to aim for as the market is in motion. And you can see, like, all right, if it rejects this point, that I should play the opposite way, or if it holds this point, then I can go further, right? This is the beginning of the month of October, and we're broken into this area right here, this top 50% of the top 50% of this trend, right? So I would automatically think to aim for the top of this trend line, which is 143 for Jazz, right? You can also check this by looking into, I want to say it's the X, oh, here it is right here, the XPH, right? So you always want to come and check this as well. So come to the ETFs and scroll through the ETFs to see if that ETF is moving, right? That ETF is going to tell you what that everything else is moving, right? And then you can kind of gauge a target off the ETF that's going to correlate to the target on the play that you're in. So we got there, and then I would aim for this next, right? So that would be my two targets off this ETF for the month, right? Right now we know that on the month of October that just started, this ETF is coming up to this, meeting this wick right here, right? Because everything is a fight in the market, right? Everything is a fight when the price is moving up, and it goes up from, let's just use this candle for instance right here, right? When price is moving up, well, I'm sorry, I'm using the wrong candle. I'm using the right candle, but I'm saying this the wrong way. Let's say that these are the candles that are moving up. So this is the candle that's behind, right? So we're always working off of like a past candle. This candle right here, if I do like the 50% on that, right? And again, you could put any fib on this and do what you want. I just like 50%. That's all I'm concerned with. I don't care about everything else that's in the middle. This is the candle. This is the last candle. So this is the candle we're fighting, right? So as price is going up, we want to see this candle get defeated, right? So if I zoom into this real quick, and because that candle is much higher up, the green one, and I'll point that out in a second, because this candle is much higher up than the bottom, we don't need to even worry about the bottom. But this candle right here needs to beat 50% of this candle for it to go higher. So it doesn't. This candle beats that 50%. It retraces. I don't care that it retraced. I know that because it beat this 50%, 9 times out of 10, it's going to test the rest of this 50%. And then that's what you get here, right? And then this candle came back again, right? So this is like a scalper's paradise. And forget about that. This is a monthly time frame, right? That has nothing to do with it. We're talking about price action, right? So this works on any time frame. This comes back, this breaks out, boom, it beats this candle, right? In the process of fighting this candle right here, this red candle, if we come to this candle right here, right, and do that on this, the 50% thing, right? Well, first, let's even just pull it out here real quick. You can see that this green candle right here ended on the 50% of this candle right here, right? This green candle right here also blew past, way more past than 50% of this candle. This candle was automatically going to get defeated. Once this candle started coming up and it beat the 50% line here of this candle, you know the top of this bar was going to get tested next. Same thing, you just move this over and do this again. And now you're aiming for that 50%. The 50% got beat here, so you knew that the 45 would have been the next target. All of this is within this candle, so this candle is out of the equation. This candle already gets beat just because that's all that's left in it, right? Once it crosses this, there's no percentage left, right? So then this is what we're looking at, right? So this is why we're here now, right? So you come to this candle next, and you pull this one down like that, and you can see where we're at on this one, right? You can see that we broke over the 50% on this monthly candle. You know that normally what happens when you break a level, it retraces. After it retraces, it breaks right back out, right? Comes right back over this 50%. Why did it go all the way to the top of this candle? Because it broke the 50%. So now it reached the top of this candle, right? This is just the beginning of the month. It could either have a crazy pullback, right? Or it could break through. My thought is that it's breaking through. So I don't think it's pulling back, right? Because when we look at this going forward now, right? I'm sorry, wrong candles. Look at this going forward. If you use hollow candles, you know that the trend is still intact as well. You could use Heiken Ashley as well, but you can see the trend is still intact if you know how to read hollow candles properly, right? This is going up higher, right? We get higher than this. If we look to the left here, right, all of these candles in this party right here, they're all cleared. This is the only fight that we're facing in this party, right? So now if I take all these off now, this right here is what's going on for next month. This is how next month should play out. Now, if we get over this, then we can break this down into 50%, and we can gauge what's going to happen next from right here. So if you want to be safe, you can wait for this to break. I know this is up a little high. It should be down here. You can wait for it to break over 48.75. Once this breaks over 48.75, get into play. Your target is $50. If you can play for a longer period, 2, 3, 4 months out, 5 months out, 6 months out, you can play for the $52, right? Because we know that the bottom 50% of this candle has already been destroyed. So we also put the 50% down here, right, to account for any possible pullback, right? And I wouldn't think that it's pulling back to $47 in my opinion. So then I would break it down to here And when you break this 50% down, and I'll clear this one off so you can see the number. When you break that 50% down, I'll take this top half off too. You can see that if there is any type of a pullback, it should only pull back to around $48, right? It's at $48.50 now, so it shouldn't lose $48. Then it should continue further, right? But yeah, that's just basically how I go through this, looking at this without kind of using like any indicators at first. You know what I mean? I'll put indicators on. I have plenty of indicators. As you can see, there's 10 in the thing, but I choose not to use those first. I choose to look at these charts, break them down, figure it out. Once I figure out what's going on these charts first, then we could talk about what we're doing with indicators afterwards, and that's just extra confluence. All right, so I apologize about that. Just had a little interruption from my son, but how do you do like stop losses moving like this, right? So again, it's the same way that you would handle a stop loss on a lower time frame, right? You're let's see. This is the ETF. Let's get out of the ETF real quick. Let me go back to Jazz real quick. Just like let's say for instance we're like using like the orb or something, right? Let me find the area on this chart. This chart sucks. Let's do Johnson and Johnson. All right, this is a perfect example right here, right? Now with Johnson and Johnson, let's find like a good area to start at, how it started. Even something like this, right? So we want to start of the day real quick. 2, 3, Monday, Tuesday. This Tuesday. All right, this is Tuesday 20-minute right here, right? So a lot of people do the orb, right? So Tuesday 20-minute orb, you start the day off. There's no trade in here, right? It goes out the bottom. There's no retest. There's no trade on the outside. It goes out the top. There's a retest right there. There's a trade on the outside. Same difference on any time frame. You gonna take this for your position, right? My stop loss. Looking at this range right here, like I said, I always like 50% of the range. When you take the 50% of the range, this is how you can also tell where prices more than likely headed to while it's in the range, right? You see, for the most part, price held under the range for the most part, and then it had a breakdown before it had a breakout of this range. So you could have had an idea that price wanted to move down before it wanted to move up, but you're following the sequence of the orb and however your whatever your rules are to get into a trade. So once you find out where you want to get in now, whatever the target is, you know what I'm saying, that's not what the discussion's about. But you get in and you're setting your stop loss. Me personally, I play a lot riskier. So my stop loss is, it's not ever defined really. It's more or less mental, and it's like this. Like this is my analysis of the thing. So I would say 81.75 is my stop loss. So I'm not going to punch that stop loss in, but I'm going to hold that, hold myself accountable to that, to push that button if 81.75 hits. If 81.75 never hits, then I'm following this play, right? Now, how long am I following this play? Once the every 20 candle, this 20 minute candle, right? That 20-minute candle goes. Let me cut this off real quick. Take this off. But this 20-minute candle goes, then I'm taking this 20-minute candle and doing the same thing, right? This broke down, and it broke this 50%, right? So more than likely, I probably would have taken my profit. I probably would have took profit somewhere higher, right? Because this candle went even higher than this after the 20-minute. So this went first, right? So this goes second, right? Once this goes here, once you get a red candle, right? My next rule is, once you get a red candle, is to take that and draw a line on top of that red candle. That's like your first ceiling. That's your first shelf, right? The same thing way that I showed you on a higher time frame, that you want to retest those shelves. You want to break out of those shelves, right? So this goes up here. Once I get this red candle, and this is where I should have put my 50%, not down here. I apologize about that, because like I said, the candle went higher. Once this red candle comes here and it breaks this 50%, you're probably going to get out of the trade, right? So you get out of the trade, boom. But what's your next entry, right? You're looking for your next entry. Your next entry would be once it breaks the top of this level, right? So boom, it breaks it right here. It retests it right here, right? Both these candles, this is where it goes, right? So now this goes here, but what happens, right? Once this breaks out, you know that this is the shelf, right? This is the new shelf. So because this is the new shelf, then you're gonna see price want to come back to this shelf at some point, right? And then it goes again, right? Now, again, you want to start noticing things as price is moving along, that could be possibilities in here, right? Possibly you could have an inverse head and shoulders building right here, right? You possibly could even have a cup and handle building right here, right? So now this is all like perspective. This is like that ink blot test when they throw the ink on the piece of paper and they're like, what do you see, right? Somebody might see one way, somebody might see the next way, and it's not that is wrong, right? There's going to be many different patterns within this whole situation. It's just to know how to execute properly and just understand the sequence of price action. Once you can understand price action, that's what the market is, right? That's all the market is. The market is higher highs, higher lows, break a price level, retest another price level, run again, and it's just repetitive. I also try to tell people, when you're following charts in the market, right? Don't try to jump into 20 trades. If you know, like all right, this is how I look for like just trades at the beginning of the week. So I come here to, so I got this I got a bunch of different whatchamacall lists, as you can see. Watch list. This watch list right here is just all the ETFs in the SPY, right? So if I wanted to go like sector hunting, right, then I'll hit the change in percentage, right? And it all depends on what I want to do. Am I looking for shorts, right? Is short in the market my thing? Is going long my thing, right? So now I'm setting this up and I'm just hitting the percent change, like, or the price change, the value change. And I want to see whose values change the most, right? And then I'm just going down, right? Because I'm a person that's looking through charts and correlating charts to how the market moves. I don't listen to news or nothing like that, right? So I'm gonna start here with whatever the highest one was. This was lower this morning, right? But it still kind of took off, right? Um, but I'm gonna start here, and then I'm gonna just go straight down the list, right? And all I'm looking at is the different sectors and see who's breaking out. Once you see who's breaking out, what sectors are breaking out or moving for the day, that's where your focus should be at, right? You shouldn't be looking all over the market for a million different trades just because you heard somebody else say, "Oh, I made some money in Tesla, I made some money in Microsoft, I made some money in Google." You know what I'm saying? Trading is about your perspective on the market. It's not everybody else's perspective on the market, right? Everybody else's perspective is part of the noise, and that's why most traders end up losing. Is because you're so caught up in all of the noise that you don't know what to do. You get cross-eyed. You know what I'm saying? So it's easier when you just focus on something, and I'm a victim of that too. You know what I'm saying? I might be in something good, and then go hop to get into something else because everybody else is making money on it, and then turn around and be in something good making money, but being something bad losing money. Now you breaking even on the day, or you know what I'm saying, and then that becomes a waste of a time, especially when you're using trading as a career, right? Because you don't want to go to a 9 to 5 and work from 9 to 5 to break even, to walk away like, oh, I didn't make any money for the day. You know what I'm saying? I made some money, but I gave it all back. That don't make no sense, right? So when you're trading, you want to treat this like a job. You want to treat this like, all right, after this trade, at our profit, I need to figure where am I going to shift this to profit again. And if you can be in this anything, like I said, it doesn't have to be daily trading. You can look at this any chart the same way that you look at a daily chart. You can look at it. You look at a monthly chart, a weekly chart. They're candlesticks are all the same, right? Price action is all the same. It just takes longer for it to move because it's broken down into or it's consolidated into more days, right? But this is the way that you follow the market. It's just price action. So if you want to make a longer trade, you got to have longer money, right? And then you got to position yourself just to get in for a longer period of time. But it's the same thing. But you got to have that. You got to remember to keep that mindset per time frame that you're on, right? You don't want to get into a monthly trade and then go look at the trade on 5 minute time frame. You're gonna hop out of the trade, and then 2.5 weeks later, 3 weeks later, you're gonna see that trade had taken off, and all you had to do was leave it alone, right? So always remember what time frame you're building your thought process off of, right? If you get those crossed, you're gonna just end up turning good trades or good setups into losing trades, right? So, but yeah, this so this is what we do to find out what's going on. So we know that this sector is popping right now. Same thing I said with the other one that we did the last time, right? And I'm looking at this chart right now, and I'm like, in my mind, I'm cracking up, right? Because as soon as I'm looking at this on the weekly, I understand everything that's happened in this chart to where it's at right now, right? Just everything that's in the frame, and it's so funny, right? Because it's predictable, right? And people who have taken classes with me before probably see some of the things on this chart right now that it's like, oh shoot, we know this was going to happen, right? But it's not about timing it. It's about playing with time. And playing with time is about putting yourself in the position to where people are going to I guess, quote unquote, call you lucky, but luck is where preparation and opportunity meet, right? So you want to just be prepared for these moves, for these things to happen. And like I said, if you study like chart patterns, bar combinations, price exhaustions, and all these other little things, you'll understand what's going on in these sequences, right? Everything is just on screen for you. So right now, I would say that this is a weekly. So this week might have a little more upside to it, just a little tiny more upside to it, but it's gonna continue, right? We know for sure it's aiming for this 150 area off of this chart, right? We know how it even got down here in the first place, right? It came from this section, right? It just came back to that section, right? So we understand the how price brought it to this point. Now, if 150 is the target, and we know that in order to get there, like, so it's not going to happen this week. We can go to break this down even further, right? Now you can use like ATRs and all this other stuff to see how price moves and the amount that prices should move for the remainder of the time and so forth. But yeah, this is how we just figure it out each step of the way. So now this area right here should be our target for the end of October, right? And now you can use this information to play tickers within this sector, right? Price always wants to return to where it came from. This is how the market works. It's like so repetitive, it's crazy. And the easiest way to really hit these things is just to have patience. If you could wait, you can win. If you don't have no patience, you're either gonna take a 1,000% trade and take 10%, or you're gonna take a great setup and waste it. You know what I mean? Like right here, we got like flags in here, right? You got a flag breakout here, right? We got market structure break right here, right? You got a breakdown right here. Off of this area right here, right? We just came back to this breakdown, right? Price is moving up. If there's any type of a pullback in this situation, you got 141. All this is done without using the indicator. Now, once everything, you figuring out what you want to do, where it's going to go, why is it going to get there, those are your personal confluences, right? After you have your personal confluences, then you can open up any of your indicators and say, all right, what does my indicator say? Is my indicator telling me that, hey, this is going to take off, this is going to move, this is going to do this is going to do that? That's when you start opening your indicators. After you do that, it's just about adding confluence. This whole thing is a math game. In my eyes, this whole thing is a game about math. And if you can understand how price action moves, like I said, it's breakouts and retests. If you can understand that, then you and then you apply that to everything in the market, right? So if price action is about breaking pivots or breaking market structures and retesting those market structures, and everything is about breakouts and retests, then You have those same breakouts and retests on chart patterns. You'll have those same breakouts and retests on bar combinations. You'll have those same breakouts and retests on order blocks. You'll have those same breakouts and retests on fair value gaps, right? Everything is going to do this same thing repetitive over and over again. Have some patience, and this is simple. All right, so outside of that, let's just look at some things that I think got some plays for this week. Now, right here, you can see like Head and Shoulders too, right? So it all just depends on what time frame you're looking at things from. That you can find these things easily, right? But it's just you have to look for it, and you have to know how to recognize it too. That's the next thing. So it's just there's a million ways to do this thing. You could do Elliott waves. You could do the strat. You can do ICT, SMC, Wyckoff theory, capitulation theories. It's so many ways to trade, and like I said, just find out what works for you really, and after you find that out, make some rules and stick to them. You know what I'm saying? You gotta have the it's three things that you need to be like a profitable trader, right? And I don't mean like a profitable like every once in a while. Like I'm talking about consistently profitable. You gotta have the proper mindset. You gotta have a good strategy, and you gotta have great risk management. If all three of those aren't aligned, you're gonna fumble the bag somewhere, right? So work on that. Everything isn't about trading options. Everything ain't about listening to alerts on Discords. Study and understand how to do this. I've been studying this for like 16 years now, probably going on 17. I was one with a billion more lines on my chart and a trillion indicators, right? And making silly trades because an indicator told me to make a trade. And I just kind of figured out that just wasn't the way to do things, right? That's not how it works. So, all right, let's look at some things now that I think I'm interested in for the remainder of the month. Let's check out gold. Good old gold, right? Good old gold. As you can see, we have cleared one of my targets, which was 358 today. I want to see this actually go to 360, maybe this 360, 362, something like that. This was a pretty decent trade. I've been in this gold trade from down here Thursday. I believe this was Thursday last week. Got into this gold trade and I'm still in it. I don't run from things like this, right? This bar came down here. I'm still in the trade. My trade is still healthy. Somebody else might have a different mindset and probably would have took profit when they saw this falling down, right? And then re-entered the trade. It all depends on how much work you want to do. I don't feel it necessary to jump in and out of every single trade for every single red bar if it's going up, and vice versa if it's going down. I got a target in my head. I got a target from analyzing the charts. So because I got a target, I'm not going to run from the trade unless certain things happen. All right. So in the case of gold, we had gold consolidating for a little while down here with this right here. So I remember when gold broke out and this and all this. So this is gold breaking out, and if I can show you gold real quick on a larger scale, let's go here on the weekly real quick. I want to believe it's the weekly. Yes, the weekly. Gold from, I want to say it's from there, it's from here more. So from 2012 to 2020, gold was in the cup. Then created this handle right here, right? And broke out. So gold was in the biggest cup and handle supposedly ever that was in the market, right? So there you go. You got a cup and handle on gold. Hence why gold is taking off so crazy, because this cup and handle is not a cup and handle from a week ago. It is a cup and handle from years ago, right? And it was years in the making. So you have gold breaking out crazy, and then you have a lot of people like, oh man, why is gold breaking out so much, or what's going on? And this is going on, right? Everything is always on the chart. It's not something that you got to kind of wait for. You got to analyze the chart. You got to understand how to read the chart and understand what's going on, how price moves. So boom, we got this going on. What do we know about this situation here, right? So this is another tip that I give you. And even in giving you this tip, it's for you to go do your own research, right? Because I can give you tips on every single thing that I do, but I would hope that this is in some type of exercise to get you to go and further do more research. Shit, you might even possibly come back to me and tell me something that I missed or that I didn't know. You know what I mean? So anyhow, cup and handles are continuations, right? Rounding bottoms, rounding tops are reversals. Inverted cup and handles are continuations. So they can they fail? Of course. But when you're looking at them, a way to know what's going on is you'll understand that one's a reversal, one's a continuation. So out of this cup and handle, right? This is a cup and handle. This whole sequence, you had like a rounding bottom here, right? But rounding bottoms happen at the bottom of a downtrend. So this really doesn't count, but it kind of counts a little bit because there's a downtrend right here, right? This is the bottom of the downtrend. So this is a rounding bottom, but it's more of a cup and handle in the full sense. But again, cup and handles are continuations. Continuations are directional, right? So it's going this way. Cup and handle continues this way, right? That's continuation. A rounding bottom would be a reversal, right? That's price dropping from down up top and then scooping around and then going back out. Rounding bottoms and rounding tops are parabolic moves respectively, right? I know a lot of people only think a parabolic move is to the upside, but parabolic moves are just when I would think that it just means when the chart just kind of drops, the falling knife or the rocket, right? So this is a sharp reversal when it's a rounding bottom. Those are reversals. These are continuations. All right, so continue. This is why we're all the way up here. Gold looks great, right? This is our gold shelf right here, right? This is our latest shelf, 317 on gold. Gold could come up here and then run back to 317, right? It can go up a little higher and then run back to 317 and then move up again. What's the possibility in gold dropping down here? In my mind, gold is always used to hedge against the market, and because it's used as a hedge, one should be going up and the other should be going down. In most cases, that's how it goes. Currently, that's not how it's going, like within the last month or so, gold and the market are like running together. But again, in my mind, how things work, we break out, we got to retest and come back and retest where we break out from at some point. In my mind, this never retested right here. So at some point, 317 has to be a retest on gold. That's not far from 360. That's not a lot of points, right? It's absolutely not a lot of points. As you can see, gold has dropped before for a couple of points. It's nothing, right? So people panic when they see pullbacks and hear about pullbacks and stuff like that. It's part of the market. If you now there's another thing to this where it's like, what are you better doing, right? So you got to analyze yourself, right? What are you better doing? Are you better trading with the market or against the market, right? If you're better trading with the market, then, and this all is a patience thing, right? If you're better trading with the market, then you wait, right, for call setups. If you're better trading against the market, then you'll wait for reversals, right? Against bullish setups, right? Know what you're better at. Work on that, and then practice waiting. You don't have to take every single trade. You don't have to take, it's about to go down, let me get in these puts. I think it's going to bounce here, let me get into this call. You don't have to do that, right? That shows lack of discipline, right? That you can't sit on your hands and watch the screen until everything aligns, right? So we got this move on gold here. If I'm looking at this, I would think we had like an ascending triangle here, right? I would think we had an ascending triangle there, broke out a ascending triangle, right? It's been moving ever since. Has to come back down to the top of this at some point. When it happens, who knows, right? What do we have here that's within this? First thing that happens when this broke out, we have a weekly fair value gap down here, right? So there's a fair value gap right there. Do we have any other fair value gaps or anything up here while it's going up? Oh, how did I do that? So we got a fair value gap there. Then no fair value. This candle is still open. This is the weekly candle, so there's no other fair value here, right? Hence the reason why the market is continually gone. You have this fair value here, right? But outside of this fair value, the reason I didn't just automatically count this fair value is because there was no, this is a fair value, these three candles. So then the next candle, I would use this candle right here with this candle to make the fair value. But just because there was no fair value, I'm just saying, you know that this candle, because these two candles didn't make fair value, you knew that the next candle was going up, right? And then it's going to keep following after that. So once this starts to pull back, you have some zones to look for, right? You have the 340 zone, and then you got the 325 zone to look for on the way back. And then once it pulls back and it goes again, it keeps going. I'll show you something real quick. I'll put it on the screen. Give me 1 second. Let me pull this up real quick. So this is how, like I say, this stuff works, right? This is an older post, right? This is from 2023, right? This was a play on gold that I took. And again, you see, I have a 3 month target, right? This is a short on gold. Now, my mindset is that it's 3 months and this is how it's going to go, right? This was back in 2023. Again, I believe that it's always on the chart. Other people would say, nah, it's not on the chart. This was my gold chart, right? And how I thought everything was supposed to move. And this is what happened at the end, right? So it's kind of harder to see it because it's in a different time frame, but I'll explain it. You could just see all the red lines of where they are, right? You see the red line, you see the yellow line, the yellow line, you see the yellow line, the yellow line, the red line, the other yellow line, I erased it. You can still see the dotted line coming down, right? So you see this wedge right here is more or less where this comes from, right? Up into this right here, right? So you don't see the wedge in this top picture, but you see the wedge here, right? It breaks out into the wedge, and then somebody would have drew this wedge and said it was going to break out and go to the upside, right? I drew this wedge and said it was going to break out and reject and run down, right? Because there's other confluences on the chart. It's not just about drawing the chart pattern and saying this is what it's going to do, right? You have to also put all these other confluences together. So this is a downtrend and it's going to break out, but it's not going to break out and keep going. So then it runs into this trend line, same trend line here, right? So as you see, I say, and matter of fact, this is it up here. This is it all the way up here. This is the beginning of it. So this isn't even the wedge. The wedge the wedge is drawn from later. So I apologize for saying that the wedge was out of the screen. This is the top of the move right here, right? And then it came here, right? But as you see, I had this all drawn before the wedge appeared. That's the entry on it for the put. This was a 2-week target to come down to the red line, right? It went from here and it comes down to this red line, right? This area, right? It bounces off of this yellow, right? Bounces off of the yellow right there. Goes back up to the red line, right? Bounces off yellow, back to the red line. Bounces off the yellow, back to the red line, right? Then it shoots down here. That's a 3-month target, right? Bounces off the yellow, back to the red line, boom, and then it shoots down here. So you see, all of this stuff you can map out way ahead of time. I ain't gonna lie, this shit takes a while, right? And it takes a lot of like back and forth and is it not? Could it be? You know what I'm saying? So there's times where you're gonna be wrong because you're gonna miss something, and that's where you're gonna be wrong at. You're not gonna be wrong because you analyzed the chart wrong. You're gonna be wrong because you missed something on the chart, and then when you go back and replay it, you'll say, "Oh shoot, that's what I missed. Okay, I got this." Right? Outside of all of this stuff, like I said, this is gold is a play that I'm looking at and I'm on. Obviously the SPY and a couple other ones. ALGN is another one that you can look at. ALGN should start taking off soon. It's way down here, but it should start turning around soon. As you can see, it's starting to pick up a little bit, trying to regain this big drop here. So I wouldn't aim just for the top of this drop. I would more, looking at this, so we got this right there, right? So this would be the market structure in this situation, and then this also right here, between this one and this, would be market structures as well. So I would play this more or less for right now, just like on an ICT setup, right? So again, I take a little bit of everything to make up what I do. I would play this like on an ICT setup, right? So that we know that we have highs and lows, right? And I want to say that we just created like the last low, right? Let me go on the monthly real quick, and just see where this comes from, right? So you can see this right here. If we come here to the left, right there, this is a shelf, right? This would be considered a shelf, and I can take this bottom one off real quick. This would be considered a shelf, right? This was a breakout, right? Comes back here, creates the shelf. Now we're bouncing here. Now we just broke the shelf a little bit, right? Price should kind of try to regain this right here, right? If it happens to break down lower than this, you want to aim for like breakouts. Breakouts are consolidation, right? So this would be the last breakout. This area right here. So I say this right here. If this happens to break down any lower, which it could, because it's actually closed underneath of this right now, but it's a monthly bar, so we'll see. If it ends up pushing up, you got a quick play to 141 on Allegiant. I said Allegiant, Align. If it doesn't recover, what is this one? So this is saying 127.37, right? And it already recovered that because it's 127.52. But if it falls back below 127.37, here's a put. This is the perfect put right here. $95, easy. You don't even have to think about it. Buy it with time though. It's a monthly chart, so you're gonna have to buy 3, 4, 5 months out. But this should be a perfect setup, right? So this is how we find these different setups without even like thinking about nothing, without even digging into the charts and throwing all the indicators on. Right? So, yeah, with that said, I do like I say, use a couple different indicators and stuff when it's time. Let me see what this is what I like to call like my EKG. And again, I don't use it often because I'd rather just look at the chart. But I'll do stuff like this, right? Instead of putting all your indicators on one chart, make a screen for all your indicators. Well, this is like oscillators, just to say, right? Put all your oscillators on one chart, right? This removes the clutter off your screen, and you can use this if you have multiple screens and see what's going on. You could split the screen. You can have this on one side of the screen and then have charts on the other side of the screen, right? But yeah, whatever's going to help you get through the day and make sense, that's what you should be doing, right? So yeah, that was like some indicators on there. We'll talk about those another day. But yeah, that's how I work with these charts, man. It's just simple what I do and how I work it. All right, so appreciate everybody was here. Everybody that's in the discords and all of that, I'll check y'all out tomorrow. Anybody from Twitter, YouTube, Facebook, wherever you're from. Appreciate you all for joining in. Yo, follow, like, subscribe. The videos will keep coming. Those links in there, the YouTube, the Discord, if y'all want to join the Discord and learn. I teach classes. Yeah, but just get with me. All right. Peace out, everybody.